What's up, you guys? Hope you guys are doing well. So today we're going to break down a play that got us a cool plus 120%, and that was the Ethereum short from here, from the all-time high to here when it corrected down. So for some background, Bitcoin recently just got dumped from around the 64.85K level. So before Coinbase was going to get publicly listed, it's an exchange where you can trade crypto. They wanted to pump the cryptos, so they pumped it up to create hype for the Coinbase exchange so that people could buy more shares of it. They pump it and then insiders sell, the typical stuff like that. So Bitcoin at the time of before the Ethereum short was consolidating, and it was forming like a mini bullish bearish pennant, as you can see right here. Went down. I'll draw it out to make it a little bit easier. Went down here, the top, a little bottom right here, and then it breaks down below right here. So while I was trading kind of horizontally in this bearish pennant pattern, Ethereum at the time was actually making a new all-time high. So it was going up, see these bumps, all the way to 2650. And this is also due to another chart not a lot of people follow, which is the Ethereum over Bitcoin chart, which shows 3.5-year downtrend. So the Ethereum Bitcoin chart shows how well Ethereum performs compared to Bitcoin. So Bitcoin was pretty much kind of outperforming Ethereum until recently after it broke the 3.5-year downtrend. So the results, everything else is correcting downward, including Bitcoin, while Ethereum is going up and exploding. So this creates an unusually high reward to risk ratio short because Ethereum is overbought compared to the overall markets, which we can take advantage of. So for some technical analysis, in the long-term picture, Ethereum is still very bullish as it hasn't reached that peak euphoria phase. So the peak euphoria phase is when you see this big candle on the weekly going here, 1, 2, 3. It's when everyone gets into crypto, including your mom, your grandpa, strangers who don't even know about crypto. They start getting into it. So Ethereum didn't really have that phase yet. It's still slowly uptrending. So it's still overall solid. Then in terms of the medium term picture, it's still respecting that overall trend right here. We got from here, we'll turn to blue just to show it's bullish. So it's still respecting the trend. You can even pull back if you want to, all the way to December 30th. So it's been on a multi-month uptrend and it hasn't broke down from that yet, while Bitcoin actually broke the uptrend. Let me pull it back. As you can see here, it was uptrending up, but it broke down from that descending wedge and went down here. So Ethereum was still good, medium term. It was still bullish. However, everything else was correcting downward. So this creates an abnormally high reward to risk ratio as everything else tends to follow Bitcoin, while Bitcoin was selling off, but Ethereum was still uptrending at the time right here. So we go on the 1 hour time frame to analyze it a little bit more. After Bitcoin initially sold off, Ethereum creates like a little triple bottom right here. We'll draw it in. 1, 2, 3. You can even call it a mini double bottom right here. You can turn that green just to show that it's bullish. And then before the shorts, it formed, let's count how many bumps we got from the double bottom right here. We got 1, 2, 3, 4, 5 right here, all the way to that new all-time high. So this creates a very compelling shorts as Bitcoin was preparing for that bearish pennant right here. It was preparing to break down while Ethereum was shooting up, creating 5 whole bumps. So this creates a strong short where we enter in at the first red candle. Worst case scenario, we set the stop loss right above the all-time high. So all-time high is around 2650. We need to set a stop loss around 2670, 2680, or if you want more wiggle room, 2730, just in case it tries to break above that 2700 level. So we scaled in initially at this first red candle. So you don't want to scale in all the way, because what if you scale in a little bit here, but then it shoots up? So we'll pull it right here. For example, this one, red candle, it could be a little bit weak, and then the next one, it starts shooting up again. Same scenario could have happened where this red candle is kind of weak, so we want to scale in more as a bigger body red candle shows up, indicating more bearish price action. So we wait another hour. Okay, and now there's very strong bearish candle right here. It's a big body. It went below, so we fully scale in maybe another 1/3. So we let it run, set notifications at the red and green hydrogen Ike candles. If it turns green, we scale a little bit because there's some bullish action. And we also set notifications around each previous resistance level, which becomes a new support. So 2490, so around 2500. And then another one, 2340. Another one, 2240. Next one, 2150. Next one, 2080. Next one, 2030. Around those areas. So we'll wait until it reaches those. Then hits the first one right here, which you can have the option of scaling out at that previous resistance. Or if you want to let it keep playing until it hits the first green candle, you can. Then it goes down. Okay, then here's an interesting aspect. It starts to retest the 200-day SMA, which could be a strong support. And in combination of that, it's also oversold around for the SRSI. So for me personally, I took some profits as soon as it hit here around 2330. So it's up to you to decide where you want to take profits at. But it is also around that 1/2/3 support level down. So I decided to take profits there. Up to you to do whatever you want to do. So from here, there's probably a high chance there might be a green candle after it hits the 200-day SMA, which will bounce up, which you could scale out a little bit more. But if it doesn't, then you just let it keep running. Okay, in this case, no green candle, it keeps going. Okay, we let it keep going until it reaches a lower support. Next one is 2440, or it creates a little double bottom or something. So we'll see where it goes. Okay, low support, and then it creates another extremely long wick, in which it's also near that 2140 support we were looking to take profits at. So in my case, I took another 1/4 profit there. And then it also is becoming extremely oversold around 30 RSI again, in which it may be good to start looking for a long position or just scale out your short position. So we'll see where it goes. If the next candle is a green candle, we take some profits again. If it continues being red, we just let it fly going down. Okay, keep it going, red, let it fly, let it fly. Okay, let it fly. Okay, creates a little lower low. Okay, let's see where it goes. Green candle, boom. That's where you can scale out another 1/3, because now there's probably going to be some kind of bounce as it reached the 2100 level. And our max support we were looking at was around 2044 to exit. The next candle, another strong green candle, which indicates very big bullishness coming back to market, in which you could fully exit your position. Okay, so 3 important keys in this. The first one is to identify abnormally high reward to risk ratio scenarios like this one, where we want to go in a little bit heavier. So that means going long in undervalued assets in the bull trend, or the opposite for this case, going short in overvalued assets in the bear trend. So the reason why it was overvalued because everything else was selling off while this one was creating all-time highs. So that creates a more obvious short scenario. The second key would be to patiently let the swing run by playing off notifications, right? So if it goes down a little bit, a lot of people will just overcheck. They take profit here, 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 and then they're fully out of their position when it gets to 2,500, but they could have missed all of this movement all the way down to 2,100. So set notifications at those key resistance support points or those extremely long wicks, like these two candles right here. The third is to exit at validation points, even if it means your P&L goes down. So if Ethereum broke another all-time high, we should have exited and then re-entered at the next red candle. So luckily in this case, it went down and our shorts went as planned. However, we must be prepared for scenarios in which things will not go as planned, which will happen, especially in crypto. So hope this breakdown helps, and talk to y'all next time.